So welcome. I am Mary Hunter. I'm Director of Development at Angel Flight West. I've been a part of the organization for just shy of 4 years now, and I've had the pleasure of working with the incredible AFW community and learning from aviation partners and healthcare leaders. It's really been incredible to see all of our generous volunteers and their passion and belief in our mission. I'd be remiss if I didn't introduce Henny Alamia, who's also part of our development team internally. She's managing this presentation and can help answer or guide any of your questions to our guests. And so with that, if you do have questions throughout the program, we are going to try to address them. So please raise your hand or type them in the chat. We'd like to make this really interactive and a discussion. So with that, whenever we introduce Angel Flight West to a new pilot volunteer, a very frequent question that comes up is the tax considerations for charitable flights. And with that said, I'm excited to introduce our guest, NorCal wing leader Bob Strawn. Bob is president of AMTX Tax Services, AMTS. He's been a tax professional for over 40 years and has been volunteering with AFW since 2006. He's flown over 227 missions. As a quick reminder, we are not here to give tax advice. Please do talk to your own tax professional. And we are speaking in generalities here. So with that said, I'll hand it off to Bob.
Well, good afternoon, everybody. You know, this is my first Zoom presentation ever, so if I appear a little nervous, it's because I am. Thank you very much for inviting me. Today, we're going to talk about regulatory and tax considerations for charitable flights. We're going to talk about what pilots that own their own planes and pilots that rent their planes, what they can deduct. We're going to talk about charitable giving for individuals and families. Talk about corporate giving, and finally, tax deductions of stock gifts. Next page, please. Back in 1992, the FAA was asked if taking tax deductions for expenses of charitable flights was appropriate, and the FAA started out by saying it was compensation. And then after a discussion, they decided it wasn't compensation for Part 91 and Part 135. However, any reimbursement of cost is to be treated as compensation. So pilots holding a private pilot certificate would not be allowed to accept reimbursement of costs. Now there's a tax, back to the other slide for instance. There's tax considerations with that. If you do take reimbursements, the IRS would like to tax those reimbursements, and under current tax law, you would not be able to deduct the expenses that you contributed. They would consider it a hobby, and hobby expenses are no longer deductible. So if you're going to accept reimbursement, you have to think about that. Okay, next page, please. So the IRS has made determination, as they wrote in a private letter ruling, that volunteer pilots may deduct expenses directly related to a program that promotes public interest in aviation. The private letter ruling was issued to, I believe, was the EAA, in that they were giving flights for children, to get them interested in aviation. And that private letter ruling said that it was allowable for certain things. A private letter ruling is not the official position of the IRS. It can't be cited as a reference to anything, but it's a good guide as to what the IRS would accept in the future. And they issued that letter in July of 1992. Next page, please. So when you're deducting expenses for a flight, it's really no different than deducting expenses for using an automobile for charitable purposes. You have two alternatives. You can use the mileage rate, which is 14 cents a mile, which is obviously too low for an airplane, or actual operating expenses of the vehicle or the aircraft. They're exactly the same. So in line with that, what's deductible and what isn't deductible are pretty much the same things, except there are some other expenses that you may have that you can also deduct. With charitable contributions, or charitable in-kind contributions or non-cash contributions, basically anything that you spend money on performing a charitable cause or for a charitable cause, you can deduct. So if you own your own plane, you would obviously be able to deduct fuel and oil expenses, transportation expenses to and from the airport. Again, that would be 14 cents a mile or actual fuel and oil expenses for your vehicle. Tolls and parking expenses, tie down and or landing fees at the airport that you're not based at, taxi or transportation fees to get the passenger to and from the airport, meals and or refreshment expenses provided to passengers, lodging expenses of pilots and or passengers if necessary, and any other expenses directly related to the mission. I want to give a couple of examples of that in my own experience. It always seems to happen with missions going to Northwestern California, but on a flight to Arcata once, I was flying up there and I was in the trail of a SkyWest flight, and they diverted to Redding because the weather wasn't very good. So I decided to divert to Redding. Also, when we landed, I got a hotel room for my client, and I obviously got one for me, and we stayed the night, and the next morning we flew into Arcata when the weather was much better. I also had a situation where I flew up to Crescent City, and the weather as I was coming in just got really bad, and I just told my client that I was not going to fly back. So what we did is we rented a car, drove him down to the Bay Area, and I also live in the Bay Area. And then the next week, when he was ready to go back, we just got in the car and we drove back. So those expenses were deductible. I had another situation where I had an elderly couple that I had scheduled a flight with them about a week in advance from Palo Alto to Reno. And a day before, the weather projections were that the weather was going to be terrible over the Sierras. So I bought them airplane tickets, and they flew from San Jose to Reno on Southwest. And as it turned out, the airplane tickets were cheaper than what I would have spent on the flight. So worked well for everybody, and those would have been deductible expenses. Any questions? Is everybody still awake? Okay, next page, please. So pilots that rent planes, they have a little bit more that they can deduct. They can deduct all the things we previously listed, plus they can deduct the costs of the aircraft rental, plus any insurance costs directly related to their mission. Okay, and what's really important for pilots that own their own planes to understand is depreciation, hangar costs, maintenance costs, repair costs, insurance costs that are incurred by an owner pilot are not deductible. They just definitely aren't deductible. If you go to the Air Care Alliance website, I have the link right there. It actually has a summary of the private letter ruling and a discussion of what I just previously outlined for you. Next page, please. Are there any questions about deductible expenses?
I have one question. I went to the first, distant retreat last year in Palm Springs. Are the expenses related to that going to the retreat deductible?
Yes, they are.
Okay, thank you.
If you're on the board of an organization and you have to travel to board meetings or any other kind of official organization meetings, those expenses are deductible.
I'm not on the board. I'm just an
Well,
earth angel, but
Anybody that's involved with it would be able to deduct those expenses.
okay, great. Thank you.
Okay, that could be a significant amount. Any other questions?
I have a question from Josh.
Hi, Josh.
Hey, Bob. Just wanted if you would touch briefly on what you and I had talked about one time, and I've heard from other pilots. If a plane is a corporate-owned aircraft and you're the executive using that as I forget what it was called, an employee perk or something, that especially with heavier aircraft have higher tax advantages. Can you talk a little bit about that?
Well, the use of corporate aircraft are usually deducted through the corporate financials, so the individual pilot wouldn't have any deduction to take. However, if it was a deduction that was, they use some guidelines called CIFL guidelines with a lot of corporations, and a certain portion of that gets added to your W-2. The expenses for that that are added to your W-2 and it was related directly to a mission, those would be deductible. Any other questions?
Hey, Bob, we have a question in chat. Does your comment about insurance mean that a pro rata portion of annual insurance costs are deductible? And this is from Rob.
No, they aren't. But if you were to rent a plane and you had to pay an insurance specifically for that mission, that insurance expense would be deductible. But your annual expenses are not, your annual insurance expenses are not deductible. Just as if you were using your car, you wouldn't be able to deduct your insurance expenses for using your car. But you can use your imagination as to what expenses you might encounter on a mission. I certainly didn't list them all, but there's probably something that's specific to a mission that you spent on. And if you did, you would be able to deduct it. Any other questions? Okay, well, let's move on to charitable giving. Back one, please. Prior to the tax law changes, individuals could deduct cash contributions that totaled up to 60% of their adjusted gross income. Under the CARES Act, which is the Corona Relief Act, that 60% limit is no longer there for cash contributions. So in the past, you would contribute, if you contributed over 60%, you got to deduct 60% and the remainder would be carried over to the next year and possibly even the next year for you to deduct them in those years. But under the CARES Act, you can deduct all that in the current year. And the 60% of AGI limit still applies to donor advisor funds or private foundations. So anything you donate to a donor advised fund or donate to a private foundation still has the 60% limit. Are there any questions? Okay, next slide, please. Okay, there. Now we come up on stock donations. What's deductible is based on the fair market value on the day of the donation. So if the stock has increased in value, you could avoid paying capital gain tax as if you had sold it just by making the stock contribution. So let's say you bought some GameStop at $4 and then you contributed at $437. You would be able to take the donation for the deduction for the $437. If the stock has decreased in value, you might want to consider selling the stock and donating the proceeds, because if you sell the stock and donate the proceeds, you can claim a capital loss and reduce your tax liability, and then take the deduction for the what you've donated. I see a question. If you use,
I'll read it out loud. For use of your corp plane for a mission, which is more appropriate for the deduction, the SIFL income attributed to the flight or the direct cost of the fuel, oil, etc. for that flight? Thank you. It's from Tom McGrath.
I would think the SIFL is going to be higher. So B, whichever is higher. But I can remember in my days when I used to calculate the SIFL income, that was usually higher than actual expenses. Is that okay, Tom? Okay. Moving on. Tax-free IRA distributions. Persons 70 and a half are required to make required minimum distributions. They can now make a $100,000 donation to a qualified charity and apply that to their RMD. So RMDs are required for 2021. They weren't required for 2020, but they are required for 2021. So you might want to look at that. And again, the distributions are credited against the RMD, but are not included in AGI. So that's a good benefit. Next. In 2018, the Trump tax law changes increased the standard deduction and limited the state deductions. So now many taxpayers no longer itemize their deductions. The CARES Act changed the law to allow an above-the-line deduction for charitable cash contributions to a maximum of $300. That's cash contributions. It doesn't apply to appreciated stock. And for 2021, that limit has been increased to $600 for joint filers. So even if you don't itemize your deductions, you can still take a deduction for any cash contributions you make to a charity. Moving on. For corporate giving, charitable giving, prior to the COVID pandemic, corporations were limited to a 10% of their taxable income as a deductible contribution. But since the pandemic and the enactment of the CARES Act, that's been increased to 25%. And any contributions that exceed the limits can be carried over to later years. As of right now, those changes apply only to 2020 to 2021. And unless they extend the law, it'll be returned back to the 10% limitation after 2021. So this is something good for corporations if they can deduct more than they would have been able to in the past. And so I would hope that they could do that for Angel Flight. Any questions? Next page, please. Now we're going to go into the AFID's missions flown report, and this is going to be done by Mary. But I just wanted to say that these reports are good contemporaneous documentation for your deductions, because you're going to have to fill out a form 8283 because your contributions are not cash contributions. So you have to fill out an 8283, and this will help with your documentation requirements. So Mary?
Thanks so much, Bob. And thanks everyone for your questions. Again, we do have time for more. So this is just kind of a quick walkthrough of
I think there was, I'm sorry, Mary,
steps.
I think there was a
Oh, go ahead.
question.
Oh, sorry.
I think.
Yes, Mark Walper. I can give via my corp or I can give from my personal, which would be better?
Well, I would think your personal would, because your personal tax rate is probably higher than the corporate rate. Corporate rates are 21%. Not too many individuals have a corporate rate or have a tax rate that low. So I would think the personal donation would be better.
Thanks, Mark. Thanks, Bob. So just back to AFID's or VPOID's mission flown report. This is something you can do again to provide to your tax professional. You can log into AFID's and then on the left-hand side, you'll see year-end report. And then you'll be able to put in the time frame. And after each mission, it would be most beneficial for you to add in all your expenses as a total. And then this is, again, a piece that you could take to your tax professional at the end of the year and print this out. So if you have any questions on this, we do have staff here that can answer those.
Hey, Bob, I do have a question. If you don't mind just going over again, which pieces of flight are deductible and only the portions with the patient on board, or if the repositioning of the leg? An example, Michael recently flew a mission yesterday. It was early in the AM, so he flew the night before and stayed in the hotel. Is my hotel deductible?
I would say, although I would discuss with my tax professional, I would say that any expenses from the time you go out to begin the mission, whether it be the day before or not, till the time you return from your mission, all of those expenses are deductible. Just like in a car, you got to drive to wherever you're going, you got to drive back. So the whole thing would be deductible.
Great. Any other questions? We have time for any discussion. But thank you all for attending, and this presentation will be available, as well as contact information for Bob for more detailed questions after the retreat. So yes, Dennis, the slides will be available, as well as this video too.
Bob, again, sorry, this is really from my own understanding, but I know that Tom and some others on the call may be interested. So the SIFL, is that the one that's calculated by gross takeoff weight and landing? Is that part of that calculation?
yeah.
And that's why it's more beneficial to larger aircraft?
Right, because it also it considers the maximum occupancy in the airplane versus how many are, it goes through a lot of different gyrations. So I think the SIFL is calculation is going to benefit you, partly because that's what's added to your W-2. So you like to get it back out, but if your actual costs related to just your portion of that flight, then you should probably do that, or more, then you should probably do that. But you can't just take the whole flight if it's partly for business and partly for personal and say, well, the whole thing's deductible as a personal. And again, a lot of the expenses of those missions, or not those missions, but those flights are deducted by the corporation already. So this is just how much to take out of it to put on a W-2.
There's a question from Jim Henson. My plane is owned by an LLC and I own 100% of that LLC. Can I deduct those expenses?
Yes, you can. Same as my plane, it's owned by an LLC, 100% by me. So anything you spend on that mission is deductible.
Great. Any last remaining questions for Bob? For anyone else on the team that's here?
Oh, Michael sent a follow-up question about that LLC. What if you only own half of the LLC?
Well, is the LLC paying the expenses or are you paying the expenses?
He is. He's paying the
Yeah,
expense.
then it'd be 100% deductible. You would not be able to deduct as a rental, though. You wouldn't be able to deduct the usage of the airplane.
Bob, this is Jim Hessman. And I've got a question on the one slide you had about stock deductions.
Sure.
I think you phrased the first bullet, the top bullet, as if it's increased in value, then you sell the stock and make the donation.
No, if it's increased in value, you just want to make the donation.
Okay, but okay, I was just confused by the slide then. All right, thank you.
If the stock has gone down below your basis, then it's probably beneficial to sell the stock, claim the capital loss, and then the proceeds you contribute to the organization. And then you can deduct the proceeds also.
Yeah, so you just donated the stock itself, not
Yeah.
selling it first and then making the donation.
Right. No,
Okay.
not selling. If it's increased in value, you just donate the stock and you get your deduction is based on the fair market value on the date of that contribution.
Okay, thank you.
Thanks, Bob. Jim, we do have in our next session, our fundraising session, we actually go into more detail about stock donations. If you'd like, if you can stay on at 1 p.m.
Okay, thank you, Mary.
Yeah, and just for anyone that's considering that, the angel flight policy is, and any best practices for nonprofit policy is to sell that stock immediately. It's not our job to speculate or try to hold or play the market. So just specifically to us, we do that. And then depending on, how it's designated, whether it's for operations or a reserve fund or whatever, we have a committee and a manager that manages that at the board level for how that's invested and or if it's just transferred straight into operations or whatever the case might be.
Thank you.
All right. Well, thank you so much all for joining us. Thank you again, Bob, for all this great information, and congrats on your first Zoom presentation.
If anybody wants to send me an email to ask a question, you can certainly do that. rlstrawn@pacmail.net.
Wonderful. Thank you. And if you're able to tune back in at 1 p.m., we're going to have our fundraising session that'll go into more details about our overall year and Stocks Take Flight and planned giving and some other really interesting ways to support AFW. So, thank you again.
Thank you, everybody.
See you soon.
Bye.
Thanks, Bob. Thanks, everyone.